Good afternoon and welcome to the first Vacancy Partnership webinar of 2023. Today we're here to look at what we can do to turn vacant space into opportunities for positive change. Opportunities to get the right offerings in the right places, to incubate next generation high street entrepreneurs, to enable a range of new uses that fit the needs of each local catchment, to open new income streams and increase asset values, to regenerate town centres from the bottom up. The Vacancy Partnership formed last year to unlock these opportunities for everyone, helping high street entrepreneurs at any stage of their journey to launch and expand their bricks and mortar presence, but also helping landlords, asset managers and developers to achieve their occupancy and NOI targets, helping councils, community champions of all shapes and sizes stimulate their local high street economies from the bottom up, and helping anyone offering anything that can address specific vacancy challenges to expand their reach and impact in this market. Ending vacancy benefits everyone. And everyone here today has a role to play. But back to today. Today, we're going to focus on what this looks like in practice since the Vacancy Partnership formed last year. You'll hear about a range of new solutions and projects we've been launching to address the vacancy crisis head on. My name's Alex Schlagman. I'm one of the founding partners of SaveTheHighStreet.org, and I'll be your host for today. We'll kick off today by welcoming Katie from Local Data Company to give us a state of the market update. John will then introduce a range of different high street incubator models we've been launching, and Leo will then share more about what it takes for local high street entrepreneurs to launch and succeed in 2023. He'll also introduce some of the new levels of support provided by the Joe Accelerator. I'll then be back sharing updates about the future of department stores and how they're being reimagined to create mixed-use destinations that can work for everyone. Paul will then introduce Commercialisation 2.0 and the impact it's already having in dozens of shopping centres across the UK. And then we'll welcome Gabby to share more about the upcoming events happening this year, including some exclusive new opportunities for everyone listening in at the Completely Retail Marketplace conference in April. Finally, Julie will bring this together with insight into how robust cross-sector vacancy partnerships are being formed in local places in lots of different areas up and down the UK. It's a packed agenda, so without further ado, let's get started. Katie, welcome to the stage.
Thanks, Alex, and hi everyone, good afternoon, thanks for joining. So Alex mentioned I'm going to be giving a bit of a kind of state of play of the current market, just to provide some further context for the rest of the session. So if you're not already familiar with LDC, our unique insights are geared towards the physical, retail and leisure landscape across the whole of GB. And LDC is really kind of uniquely placed in how we actually do this, with proprietary field research collection methods, kind of complete coverage of the market, and also our frequency of updates are really integral to kind of the richness, accuracy and application of our insights. So next slide, please. If we begin by looking at historical vacancy rates up to the end of last year, with vacancy always being kind of a very strong barometer of market performance, we can see that total vacancy is continuing to come down from its peak it reached in Q2 2021. So now at 13.8% at the end of last year, we can see that overall vacancy has continued to decline over the last 5 quarter periods. But I think what's really critical here is if we actually kind of zoom out and go on to compare that current rate, still on the last slide. If we zoom out and go on to compare that rate to kind of the pre-pandemic level, we're actually still 1.6% above where vacancy was in Q1 2020. So a long way from where we were. Next slide, please. So if we continue to then explore the difference in performance to pre-pandemic levels, we can see that in the first half of 2020, how immediate and severe the impact of the pandemic was felt across the retail and leisure landscape. So the total number of store closures actually reached 31,139. And we can see that's actually kind of the widest gap between openings and closures seen across the market so far. But as we move to then that same period in 2022, that figure has continued to come down. And actually the gap between openings and closures has narrowed massively. And I think it's really interesting to see that even with fewer closures, there's been a really kind of significant uptick in new store openings. And it'll be fascinating to see how that gap looks at the end of last year in our next report release. And if we look in more detail at this activity by overall net change, this illustrates kind of the drastic impact, but also the speed and velocity of which that impact was felt back in 2020. So we can see here a net loss of minus 7,834 stores. Although since then we have seen this steadily come back up, with a net loss in the first half of 2022 being really significantly better than some of those pre-pandemic levels seen, with a net loss of minus 923 stores respectively. And I think that's what's even more interesting is when we look at this net change split out by activity between the independents and the multiples. So we can see here in the first half of 2022, the independents, so this pink line, saw record growth compared with any first half year period, with a net increase of 1,335. And we can attribute this to kind of the increase and people kind of continuing to shop locally, as well as kind of that ongoing working from home hybrid mix. Also just staying loyal to local businesses, as many of us have done. And then with the chain stores, it's really interesting to see how quickly those figures have begun to recover. If we look at kind of that minus 6,000 chain stores closing in that H1 2020 period, compared with minus 2,258 in the same period last year. And some of you may have already seen the PwC press release that we did yesterday, and that notes just that kind of significant slowdown in the number of closures of chain operators. And, you know, while there still have been notable chain retailers falling into administration even at the start of this year, there are many operators that are back in growth and using this as an opportunity to further expand their estates. So we've looked at top line trends. So now let's kind of dig into specific location types. So if we start by regional differences, we know there's always been a disparity in kind of performance by region, but I think this has been kind of further exacerbated by the results of the pandemic, even back to things like approaches to restrictions and tiering that came with that, if we remember back to such a time. But if we kind of pick out a couple of interesting variances here, so starting with the highest regional vacancy in the Northeast, which reached its peak in the first half of 2021 at 21.2%. And though this has come down to 18.7% in the same period in 2022, it still remains very kind of significantly higher than the GB average, and is certainly the most challenged in terms of recovery. And staying on here, interestingly, Greater London is the only region in England not to see a decrease in vacancy. So we can see that the vacancy rate kind of increased to 10.7% and then just stayed there. And I think that demonstrates that kind of ongoing impact of workers not returning to the office at least full time, and also ongoing rail strikes. And it's worth noting that LDC can also deliver vacancy rates at both a local authority and town level. And that really allows kind of various clients to benchmark performance at their own district, both regional and national rates. And then we can also look at performance by location type, so the difference between shopping centres, retail parks and high streets. And if we start by looking at retail parks, which is the blue line, we can see that they actually performed much better in the first half of 2022, with vacancy coming down to 10.2% from 11.5% in the period prior. However, again, I think what's really interesting, if we do that zoom out again, is to see that retail park vacancy was actually sitting at about half that in pre-pandemic times. And then in comparison, if we look at shopping centres on this slide, which is the orange line, they saw their peak of vacancy in 2021. So that reached actually a staggering 19.4%. We can see also there was a huge jump in vacancy. And I think this was not only caused by the pandemic itself, but also things like exposure to CVAs and other chain brands that have had to kind of rationalise portfolios as a result. And I think, of course, with shopping centres being such a kind of intrinsic part of town centres, much of the work that LDC deliver focus on that kind of potential regeneration and reoccupancy as part of those initiatives. And if we then look how that translates when looking at persistent vacancy, which is kind of the long-term length of voids, again, by location type, this points, I think, to a much more structural problem within shopping centres, of which we can see 6.3% of vacant units have actually been vacant for longer than 3 years at that halfway point of 2022. And now we'll take a closer look at performance by sector and how that trended in the first half of last year. So there's quite a lot to unpack here, but if we start by looking at the net change in store classification, we can see that leisure and hospitality, which is this pink line, actually had record growth in the first half of 2022 with a net increase of 654 stores. And I think this really echoes that kind of pent-up demand, people wanting to be back out and socialising. But I think now we know the impact of things like the cost of living crisis that's already being felt already. So it's just really important to have a read on these things and how they could potentially shift going forward. And then comparatively, the comparison goods, so the orange line, so that includes things like fashion, books, electricals. They've seen a steady decline, even pre-pandemic, and then obviously saw that massive drop in 2020 with a net loss of minus 4,975 stores in the H1 period. I think, however, this has kind of continued to slow, even returning to pre-COVID levels of decline. And I think also with challenges in this sector specifically being kind of the majority of those categories are accessible in a digital setting. And I think kind of COVID was just a bit of a nail in the coffin for many of those stores. But all not doom and gloom, because there are still areas of growth across many categories. So this is at a national level, looking at kind of those fastest growing categories by net change. And this includes the likes of beauty salons, fast food, takeaways, and bars as well. And then on the flip side, it's interesting to see hairdressers in the top declining categories, as I think this mirrors some of the health and beauty categories seen in growth. But when we actually looked into this further, it was because most of the closures driving this are the chains, and we saw earlier chains have been impacted more so than kind of the independents. And then speaking kind of around the kind of that department store movement, one of the biggest questions and challenges we get asked all the time is kind of identifying occupiers that are actually taking up space and are acquisitive, particularly reoccupation of kind of these large format stores where we have seen mass closures. And they also have just a big impact on community and kind of overall feel and pull of a town centre. So kind of closely tracking how quickly department stores are relet, as well as kind of who is reletting them, kind of acquisitive brands that kind of can and relet these large format stores. It's really important when kind of looking at longer term solutions, and also being able to gauge kind of the expected time frame in reoccupancy activity. And here are just kind of a handful of examples of how these are being transformed, and kind of where this focus is going. And I think, you know, there's loads of interesting concepts we're seeing, some more traditional, some kind of newer concepts. It'll be really interesting to see kind of what else happens kind of across these formats. And then just to round up a couple of kind of key findings, I think vacancy rates obviously doing that, continuing to come down, although kind of nowhere near where we were. That gap between openings and closures certainly tightening, and then also those large kind of regional variations in market recovery as well. And just lastly to mention, LDC's next report is due to be published on the 14th of March, and that will be available to download for free via our website. So please do feel free to kind of check it out, and that will be looking at kind of 2022 as a whole and kind of that second half of the year as well. So yeah, thank you for listening. Hope that's kind of provides some good context, and I'll pass back to you now, Alex.
Well, thank you, Katie. A real mix of things to be optimistic about, as well as some persistent, even structural challenges to address. So let's start looking at the different things we can do to address these challenges, starting with John, who'll showcase a little bit more about different high street incubator models. Over to you, John.
All right, thanks, Katie, thanks, Alex. Yeah, at Save the High Street, we have some really unique and effective solutions to vacancy. So we're very excited to share this with you all. We have 3 different kinds of incubators. The first one is what we call the pop-up incubator. This is a type of incubator where we launch a new tenant, an entrepreneur, a local business with an 8-week window into a space with our unique support. This is a really key point that will be emphasized later. And this whole support is focused on getting that tenant to be sustainable so that they can transition into taking that lease full term or into another unit. So the whole idea is to find somebody who can eventually take that space, but give them an incentive, give them some help in the beginning of that. And then we have our business support program that also gives them even a better chance to be able to take on that lease. And then we have another type of incubator, which is that first incubator is for maybe one tenant, one entrepreneur looking to get onto the high street. Now, there are larger spaces, and there are lots of entrepreneurs. So the hub incubator is a concept where we have a larger space and multiple tenants. So the idea there is that we create a multi-tenanted space, which is curated, and it's filled with really exciting, interesting businesses that are doing events and experiential, and we'll be supporting them also to give them a better chance to grow and perhaps even incubate and get onto the high street also. And the third type of incubator is what we call a fixed incubator. And that is an incubator unit that kind of stays an incubator unit. And we have different entrepreneurs that kind of come in on a cycle. And they're not meant to kind of stay there forever, but they're meant to transition eventually into another vacant unit somewhere. And again, this is about helping them get onto the high street. So this is an interesting concept that came up when we were doing some research and talking about what is the ideal high street. And the ideal high street, a lot of people said would be really great if there was this permanent or fixed incubator type of space, which would create a lot of footfall to the high street or to the shopping center. There's always something new, connecting with the community, getting local entrepreneurs out of their living rooms and testing their products out there in the real world. So a fixed incubator is a really interesting concept that we would hope to see on every high street in the UK in the future. So now how do we do that? The next slide. Now how we do that for all the different types of incubator, whether it's a pop-up incubator, a hub incubator, or a fixed incubator, we all start with the space. So what is the space that you have? You have an empty unit. Is it a unit that's been recently vacated or hasn't been there for a very long time? And it might need some work or it might not. A lot of units, they don't have to be white boxed. You don't have to go through that capital expenditure of white boxing it if it's in pretty good condition already. So that could save you quite a bit of money. And even for the larger spaces, depending like an ex-debitums, quite often they're left with all the fixtures in there. So there's a lot that can be reused. Then, of course, if you want to kind of convert that into a food and beverage and that wasn't there, then that would perhaps require some CapEx. But it's all about getting that unit, transforming that unit into this new retail environment. Now, what's our kind of secret formula for doing that? And our approach is that we run a campaign and a competition to recruit local startups and independents. And this is done in conjunction with you. So the criteria is set. And then we put the word out there and we get all the different businesses signing up and applying. And we go through them and we select them. And that selection process is the evaluation process is also quite unique because we can really find interesting businesses, either digital first businesses that are doing really good online and they're looking for a physical space, or businesses that have a really good idea and they just need that extra hand to get into a space. So the evaluation then finds what we call the winners, but there are no losers because everybody who applies does get our business support, some level of our business support, and kind of creates a pipeline for future potential tenants. And the key ingredient to what we do is the incubation process. And this is where we help them launch, we help them manage their businesses. And we have here for 8 weeks, because that's part of the incubator programs, is that they would be supported financially, perhaps by the landlord, for this eight-week period to get them on there. But the support lasts much longer than that. So that is up to the tenant, and most likely they would continue with the business support because they'll find out that it's real key to their success. And then the whole point of this is for these tenants to be sustainable, so they can take on a lease, in the pop-up space or in the hub space. And in the fixed incubator, it's not about them necessarily taking on the lease of that particular space. It's about them transitioning perhaps to another space and to fill other vacant units, in your portfolio or on the high street. And then lastly, I want to just share with you some experiences we've had with this. The next slide is something that we're doing in Hounslow. We've done and are doing. We've doing quite a bit in Hounslow, the borough of Hounslow, and we've had some quite good success there. And it's a really good case study to kind of sum up what we're all talking about. So this is an idea, again, showing that you find these entrepreneurs and you fit them into a space and you help them grow and be able to take over that space. And in this case, we worked with the council to do this. And in our outreach in the campaign, we reached out to about, more than 100 local entrepreneurs. And we then transformed empty units. Like the first one was an empty new look space that became a bike repairman's dream. And he then went on to take on a 10-year lease in another unit. But it was a really interesting space where the council got involved and did bike training classes. And that entrepreneur, Dan the bike man, when he started out, he was just a mobile bike repairman. So now he's expanded into selling bikes, selling accessories, getting involved with the community, helping to train people to learn how to fix bikes, allowing people to sell their used bikes with him. It opened up a whole new world for him. Although he's moved into a smaller space, he's taken those big ideas that he had from that big space and is now a permanent part of his future. The second space was in the Treaty Center in Hounslow. They have a few vacant units. And this one vacant unit was kind of at the end of the mall, not a very busy area. And there was a local entrepreneur who was doing very well online, had over 50,000 followers on Instagram, selling modest wear. And nowhere in her area, I mean, a lot of her customers were in that area, but they were from all over the world. But she realized in her own hometown, there wasn't really a nice shop that women could go and buy modest wear. So that was her dream, was to open a store, and we helped her do that. The council, we helped her do that, and she's still there. This was over a year ago, and you can go visit her. It's called the Biotopia, and she's still exactly in that same spot and doing quite well. Her business, her online and offline business increased, by 40% by opening up a physical store. And the third one was purely just an idea, teaching children science, and she opened up in the council and has now moved on. Her business doesn't need a permanent physical space. She needs to kind of circulate around, visit schools. And Morgan Stanley is investing in her and buying a double-decker bus where someone will be teaching coding upstairs to children, and she'll be teaching science downstairs to children. So some really interesting case studies going on there. And now with Hounslow, we're working on the ex-Debenhams there. The Loft is a really interesting project where we're supporting over 30 businesses, entrepreneurs opening up in the third floor of Debenhams, and we're a big part of that concept. So some really exciting solutions of how to deal with vacant units. Yeah, Alex, thanks.
Thank you, John.
Hand back over to you.
Yeah, really interesting. As you mentioned, a key component to enabling the incubators you've been talking about is better business support. So it's a good moment now to introduce Leo, who can share a little bit more about what it takes to succeed on the high street this year and the different ways that a local entrepreneur at any stage of their journey can get the help they need. Over to you, Leo.
Thanks, Alex. Hi, everyone. So, I mean, it should really go without saying that successful future high streets will need successful high street businesses. And as already mentioned, there's an ever-increasing proportion of those will be startups and independents. So the question is, what's in the way of this future becoming a reality? Well, the passion and skills of high street entrepreneurs for their trade is unquestionably in abundance today. Whether that's making your hair look awesome, or serving up delicious food, or curating the right mix of handcrafted products, independent high street entrepreneurs typically excel at this. It's why they love what they do, and often why they went into business in the first place. But more than ever before, success in the high street needs more than just mastering a trade or having a great product. It requires much more work to be done on the business rather than just working in the business across a range of kind of core business areas, from marketing to finance, customer experience to retail operations, but not least to effectively leverage data in this increasingly competitive environment, which is often where smaller businesses feel overwhelmed and tend to lag behind. The problem is, though, that's rarely why these entrepreneurs start their business in the first place. So it's unsurprising. And as a result, these areas are often left broadly unaddressed and untapped potential as a result. Now, we've worked with hundreds, really closely, hundreds of local independents of different shapes and sizes over the past year, 2 years. And we're amazed to see that we always see significant opportunities for improvement on the kind of the business side of things, which I was certainly struck by, but the kind of the areas which, with the right direction and the right action, will have big impacts in these businesses reaching their goals. So what do we do? Well, we believe in untapping this potential in every high street business. And we do this by giving them the freedom to work in their business and do what they do best. And we work on the business for them and with them. We run the Joe platform, which makes it easier than ever to identify, evaluate, and implement what any high street business should be doing next and help them succeed at every stage of that journey. In essence, the way it has been described to us is Join Joe is much like having a team at your fingertips. So we work on your business developing a kind of a tailored plan to achieve those goals. We train you up and add resource to your business to implement whatever you want to do. but don't have the time to do yourself. And then we track everything as we go for you, from progress to financial and KPI performance, updating your plans to continually refine and improve the direction of travel, and resetting instructions to pull the levers in the business in the right way. We're there every step of the way. And it kicks off with a process of discovery, where we identify the gaps and exactly what your business could be doing next. Joe then evaluates and prioritizes a series of business objectives related to your KPIs for you to reach your goal, and a series of projects to put that plan into action. Joe then gets into action for you, helping your business to implement the things you want to get done, but don't have the time to do yourselves. And it kind of radically reshapes the economics of outsourcing projects to bigger agencies and things like this, but in the way that we do this. And then Joe continuously tracks your performance, instructs on steps and next steps, and keeps you updated, and importantly, keeps you motivated. On top of all this, how do we do that? On top of all this, businesses also get access to access and engagement from a series of high street experts across a range of business areas most relevant to them. So whether it's talk about marketing or financial planning, data, store design, whatever it could be. And we act basically as a partner team to the business, mentally invested in every stage of their journey. Today, though, we are running an offering, next slide. Today, we're running and offering Joe as an ongoing accelerator program. So speaking much to what John was talking about, that's focused on 2 core stages. So launch, where we help businesses launch into a vacant space, and growth, helping businesses already trading in a space to accelerate that growth. So the launch accelerator is powering the incubation support that John talked about before, helping businesses to make the most of this kind of key moment in their journey, in their trajectory. And the growth accelerator focuses on profitability, reducing costs, increasing revenue, and where suitable, also accessing additional capital required to kind of achieve that plan together. Next slide. I am in particular, but we're all really excited at the moment because we're starting to really motor, and it's been really exciting to see the impact we're having with such a diverse range of high street independents across the UK. A great example is, unfortunately, the example I was going to give was also John's example, but there's this great business called Dan the Bike Man, local business in Hounslow. John's already mentioned. He joined one of our first launch accelerators, opening his business in a vacant department store in Hounslow. And over the course of just a few weeks, he was already up and running, set up with all the fundamentals businesses need but often overlook, set up with the right processes, the right attitude, right mentality, doing what he does, but with us behind, pushing him at every step. And he's now taken on a full lease in a bricks and mortar store, which we're obviously incredibly delighted about. But we work with such a diverse range of businesses, and strangely enough, we've got a surprising amount of salons, which I think is fascinating in itself. But several retail shops of different shapes and sizes, lots of restaurants and cafes, computer repair shops, and much more. Anything under the sun. Next. Now, the great news is that any high street business anywhere in the UK can apply to join the Joe Accelerator. So we're only, at this point in time, we're only accepting a limited number each month. So stay tuned and do check this out soon if you're looking to take your business to the next level this year. And for the next intake, the price is currently discounted at £48 a week. But the great news is you can cancel any time. But I can assure you, everyone who's joined since our last intake in November is still happy going on through the accelerator. So we're quite confident you won't want to. On top of that, furthermore, we've also a range of partners across the industry who are funding access to Joe for their own local businesses. So partners can flexibly scale up or down the amount of funded support they provide to businesses they want to see succeed. And we'll be building in new features to help these partners better understand and support their networks of businesses over time. So if you're a landlord, an agent, a council, or anyone else wanting to help your local businesses succeed, get in touch with us with the Vacancy Partnership at savethehighstreet.org, and we'll talk about what we can do together.
Thank you, Leo. I think that's the segue into me again, isn't it? So can we switch to the next slide? So yeah, on to reimagining the anchor. What the huge gaps that are left by a Debenhams, a House of Fraser, a BHS, a Beals, or any other large format store disappearing from a town centre. These have been particularly conspicuous and painful. These department stores once anchored the high street they traded from. And now these huge empty spaces are symbols of decline. They impact a lot more than just the landlord income, as Katie was touching on. The successful transformation of these large empty department stores represents one of the biggest upside opportunities in the property market today, as well as one of the most surefire ways to stimulate the whole town centre economy. But what does the future of these department store assets look like? The future is not one single offering or even use class, but a whole range of different possible offerings and uses that can be combined together like Lego bricks to create mixed use destinations. A few examples. So multi-tenant hubs can be anything from zoned retail markets. John was touching on the hub concepts there. We've been building out all kinds of different sort of multi-zone environments, you know, zones for next generation retailers who are currently online coming offline, zones for eco-friendly businesses, curating interesting mixes of businesses together into larger hubs. Food and beverage markets, and we'll talk a little bit more about some of the experiences there, you know, launching successful F&B markets. Second-hand flea markets, big opportunity to get the resident community back into spaces and reinventing the car boot sale. Charity markets, you know, charity offerings combined together into hubs. Then we look at other things. I think a really interesting area is this whole entertainment mix. You know, there's a whole range of different interesting things that can be placed into larger spaces that can generate income, but can generate a lot of footfall as well. Paddle tennis is a real buzzy one at the moment. I know I've been in a lot of conversations around over the last couple of weeks. All different kinds of studios, it's Pilates, martial arts that have mixes of businesses being able to offer their services within. Climbing walls, crazy golf, gravity, galleries, cinemas, you know, there's a whole range of different things that need to be curated together to get the right mix of entertainment now and for the future. Charity and community uses is a big play for larger spaces and even a number of smaller spaces we're looking at as well. And these often are led in collaboration with council programs, third sector programs, and university programs. Workspace, you know, I think we're scratching the surface in a lot of areas about kind of thinking forward about the future of workspace and where we want to be in this, you know, modern hybrid environment. But maker spaces is something that I think we'll touch on today. But you know, much more flexible workspace, like hot desking, you know, even meeting room spaces being used and taken advantage of. Events is a big one too. So you know, events of different shapes and sizes over time. So series of events often placed in a calendar for larger spaces to really activate on an ongoing basis the entertainment mix and really drive people into the space. There's lots more, logistics in storage of a service, integrated last mile shipping, and you know, we could do a whole session just on the conversion into residential uses as well. But how do we put these together? Well, when it comes to ambitious mixed use destinations, we currently focus on these 4 pillars. Industry movements come in all shapes and sizes, from giant global movements with sub-movements within them around things like climate change, to smaller local movements around something that matters deeply to enough people in a particular place. They all have something fundamentally in common. They all benefit a group of people who may never even meet, but are jointly willing to take action to support a defined change. An ambitious regen scheme or bringing back to life a single empty department store can leverage movement dynamics to run a different type of campaign with altogether better economics. To do it properly, there is an 18-step framework, but there's actually lots that can be taken from the different steps and applied to help along the way. This can really do all kinds of things: mobilizing support across your local community, generating widespread brand awareness and positive brand association, really reinforcing the ESG values and impact that you're driving, accelerating the type of change you're targeting most fundamentally. As we mentioned on the last slide, there are lots of Lego bricks that can be placed into a big space, but deciding which ones go where and when is the key question. Data-driven space curation helps get to the best answer. This combines a range of different data sets with location analytics and space strategy skills to address local gaps in the market and make the most of every inch, every foot, every meter of vacant space available. Making big schemes a successful reality is always a team effort though. Collaboration is central to SaveTheHighStreet.org, it's central to the Vacancy Partnership philosophy, and together in this case, we really are stronger. Some examples of this, space partners. We've talked about all of these different Lego bricks offerings, but who's going to deliver on these? So bringing together the right mix of different specialist operators to fulfill on this space curation roadmap. Local government partners is something I know Julie later on is going to be talking much more about when she covers the public-private sector vacancy partnerships that are unfolding in the UK. And it's really critical that wherever this originates, whether this is led by local government or led by the private sector, that it is ultimately a partnership with both. Across the community, there's a whole range of different partners and partnerships to build, from groups of residents, traders, and others in the community, to individual local champions, media owners, influencers, anyone who cares about the success of the local place can be brought into the mix. High street business tenants should also be viewed as partners. Improving their success rate increases the success of the scheme and vice versa. Leo and John both reinforced and talked a fair bit about this and talked about joinjoe.com and what it's doing now to make it possible to deliver this type of support economically at scale. But supporting, understanding, and managing groups of businesses at every stage of the journey is the key. We also believe that sharing risk and rewards with more transparency and better analytics about everyone's progress and performance within a scheme will start to become the norm, not the exception. So let's move on to the next slide and look at how some of this plays out in practice. Across our core team, as well as our mix of partners, we've been involved in a whole range of different projects to transform larger spaces. A few examples here from Mercato Metropolitano to Marketplace London, Pop Brixton, Loft Hounslow, as John was talking about, and much more. We're currently working on 2 ex-Debenham stores, but even just with the Debenham stores, this is just the beginning. Katie outlined earlier a whole range of interesting stats around the reimagining of department stores, including the fact that over half of all the Debenhams, House of Frasers and Beale stores combined still lie vacant with no confirmed plans. We've partnered primarily with a whole range of different core partners, lead partners on projects like this, from landlords, developers, lease owners, meanwhile space specialists, specific operators, councils, and others as well, to help accelerate and de-risk the transformation of big empty spaces on either a meanwhile or a more permanent basis. If anyone listening in today owns, manages, or is even connected with large vacant assets like this, we'd be happy to share our ideas And if you get in touch, I'd be surprised whether it's not at the very least a very interesting conversation and hopefully the start of something very special. If you're a space operator or you have solutions that can help in any way deliver the kind of plans that we're talking about today, we want to hear from you too. Ultimately, we can transform the anchors of the past into the anchors of the future, but we need to work together. I hope you're as excited as we are about this change. It feels to me like one of those real sort of revolutionary moments going on in the market. And building on this, another exciting and related shift is developing from the world of mall space commercialization within shopping centres. So we partnered with Flourish actually towards the end of the pandemic to look at how we could together improve the impact of these commercialization projects. So right now, I'm pleased to introduce Paul, who can tell us more.
Good afternoon. So I thought I'd start with a bit of context just to sort of wrap this a bit. And a lot of this will sound very familiar in as much that there's a consistency in what's being said on this call, on this webinar, should I say. So first of all, is the current model is failing. We've known this even pre-pandemic, is that we've taken the view that anything in a unit is good enough. And that simply isn't the case, because it affects mix, it affects cannibalization of businesses that already exist. And then we have this continual turnover. So this was happening pre-pandemic. So that part isn't particularly new. So we know this will lead to more about the data-driven curation part, why that's so important. The other thing's been happening over the last year is we're seeing a lot of older businesses that certainly in our industry we've been reliant on, that would come back year in, year out, and they're retiring, they've moved on, they've decided to do something else. And people are struggling to get these new businesses in. And there isn't really much of a succession plan. Well, there isn't one. So when things are leaving, there's no thought or process about what the next plan is and what the next unit may be. We need to look at new, small, green shoot businesses, but, and this is where the red thread is, they need support, they need development and guidance about how they make the business successful. As a company, to put this in perspective, we were about 15% up year on year versus the market, as far as we could measure, was down about 20, give or take. So we know the method of looking after procuring in a certain way works. We've been doing this for 10 years and we know it has an impact. So this is, you would say, is evolution, where we would say it's naturally such. However, as I say to a number of clients, that everyone wants to be innovators, but no one wants to be first. And that's very much what occurs today. Although I would say we're now starting to work with more and more people and property owners who are more interested in doing things differently, which is an exciting time for us. So I guess the message for this is be first, because it's net positive financially for your businesses. Anyway, slide one that we're on here. So data-driven curation. So the right businesses in the right places. So simply putting someone in for the sake of putting someone in is simply not good enough. This is where the homogenized high street argument came a number of years ago, and not one size fits all is necessarily the right approach. So a real understanding of what's required and then finding it. So as a piece of work, myself and Alex were looking at, I think about a year or two ago, we were looking at florists in Southampton, and it determined that people for flowers, apart from the Asdas as well, were going out, I don't know, it was a number of miles to buy their flowers. And the business worth was something like £100,000 and £150,000 a year. And suddenly you now have a model that potentially can work for people coming in and taking a space or a small shop within the centre. So that groundwork leads to potential success of these businesses. And then you've got the sort of proactive procurement element. So that's where we use databases, where we look at local businesses, we look at finding these companies that will come in and fill those gaps. So we're very specific by location and space, the type of things that we want. Now they may vary slightly, but so you might move from homewares might be one thing, but that might move to home improvement. But ultimately we have a sector in an area that we focus upon and start to look at. And then we look to then bring them in and put them into position, but simply to put someone in without understanding the gap in their knowledge. So again, I'll give you a live example of someone I've seen recently. who is the husband is a taxi driver. His wife bakes cakes, and apparently very nice. So they've decided that they want to start a business. That's it. They have no understanding of anything else. They have no limited company. They don't know how they're going to take payments. They don't know anything about aesthetics, nothing. So it would be utterly irresponsible of me to simply say, here's a space, 500 quid a week, off you go. It is doomed to fail. So the support network and the stuff, and we're one of the companies that use and tie into Joe with our clients, gives them that support on top of our team support to ensure they have the skill set and the understanding and someone holding their hands just a little bit in order to try and make them that bit more successful. So the business success and the hands-on support is critical. So we have a team on the ground who will talk to them regular. They will check the business. And then with Joe and the team there, we can use those guys in order, using John for his VM skills, design skills, to really get this right. And this is where it now becomes much more of a partnership approach. And if you take the model of a typical retailer to understand, well, why on earth are we doing this? Why is this important? Well, my background prior to all this madness was in retail and regional retail for a period. You would never put someone in to manage a store or run your business who hasn't got an element of competence. So it's critical that we look to develop those skills before putting them in position. And then there's the relationship care part. We just skipped off there, but that's fine. So regular on-site presence, that we're contactable 7 days a week. Don't forget, 40% of retail business happens on the weekend. We can't just shut our lights off and go to the pub. We've got to be available should they need us. And this is just an example of where commercialization 2.0 actually works. So it's 23 shopping centres, although we're going to be I would think by July, we're probably close to 30 odd shopping centres, but there's 23 shopping centres in the UK, 250 plus or so individual units being managed. That's businesses that we're working with, but there are more variables. So we have pop-ups, smaller short-term deals that we do that would extend beyond that. About 200 new tenants recruited in the last year, and that was one of the things that bolstered our 15% growth. It was all new and predominantly, almost entirely new business, local business, sorry. Retention rate, it's something that's not really talked about, but it's incredibly important. If we're bringing them in and doing all the work, if you don't retain them and you're going back to zero again, you're just simply creating more work. It's madness. So we've got to start to understand how we retain people better. You can go back to the beginning. If they're skilled, if they know what they're doing, if they know how to do what they need to do, we can make sure that they're long-term sustainable. Landlords, about a 30% improvement in NOI to landlord in terms of this type of approach. And as per the statistics I mentioned earlier, that demonstrates it. And about $1 million, it'll be better than that this year, but $1 million net income generated for landlords. So this is a win-win example, but it has to be right procurement, right support, positioning in the space, and then looking after them. This is a long-term relationship, almost a marriage, you'd say. Back to you, Alex.
Thanks, Paul. Thanks, Paul. So moving on from marriages and commercialization to events in the completely retail marketplace. Gabby, I'll pass straight over to you. I think we might only have time for one of the videos.
Okay, great. Hi, Alex. Good afternoon, everyone. Thanks so much for the time and opportunity just to be able to talk a little bit more about Completely Events and express our commitment to assisting where we can help with the vacancy crisis. So just to give you guys a little bit more insight, Completely Events are part of Completely Group, which also run completelyretail.co.uk. Completely Retail is the UK's most comprehensive online portal for retail spaces. So you can pretty much think of it as Rightmove, but for shops. So for those of you who haven't attended Completely Retail Marketplace or aren't even aware of the event, I thought that it might be useful just to start my presentation off by showing you guys a short video from a previous event in September. I think this will really help give a visual representation of the scale of the event and also just so you can hear from some delegates and not just my biased opinion. So if we can play that, please. Great, thanks.
Really looking forward to it. It's a brilliant day for us. For us, this is like the place where two industries meet. And this is such a good connection point for us for the upcoming year.
It's a great opportunity of being able to see so many people in one small sort of short amount of time.
Yeah, it's going to be a good day.
I think it's brilliant. I think the organisation's fantastic. I think the fact that it's such a good day with the different talks and the ability to network, and I think people are just pleased to be out and really finding out what is next for their businesses.
And we would obviously love to talk to you about your space too. So thank you.
It's incredibly buzzy. I think it's as busy as I can ever remember it. We've been exhibiting here for about 10 years, so we find it brilliant for meeting loads of people, and it's a huge benefit to the business.
I think post-COVID it's probably moved to another gear. It feels much more of a beneficial sort of environment for us to come and do transactions in.
An event like Completely Retail Marketplace is an unbelievable showcase for the positive changes going on in our industry today. Best-in-breed partners coming together to build solutions and offer solutions that help brands, landlords and places change for the better.
Particularly in real estate, we've seen new strategies about how do we tackle the crisis of affordable housing.
Alandi's vision is to create the UK's most sustainable and inclusive communities.
We are here to evaluate if we think this is a place to do more international businesses. I think it's a really good place.
A big change today that landlords and brands really need to hold hands and use each other's experiences and expertise to really meet the future of retail.
But in terms of occupiers and landlords, everyone wants to do business.
We're here to find new concepts and new collaborations with some of the bigger landlords.
A brand that offers something genuinely different.
Yeah, it's all about networking, isn't it? But it's been productive, and I really hope that more property owners will get in contact with me after the fair. I'm eager to talk.
We have a couple of fixed meetings, but a lot of the things it happens around the coffee machine, and so much vibrant talks going on.
It really does feel like we're all together in a room, in this together, really changing high street shopping centres and town centres for the better.
It is an amazing event. I said that all back in 2018-19 that this is the way we should all do retail events. We love it.
Wow.
Great.
Brings back some great memories, Gabby.
Yeah.
We're gonna have to speed up a little bit, Gabby, just to keep just if you can get through the slides, because we're going to run a little bit over, but it'd still be great if anyone can stay on, hear a bit more about cross-sector vacancy partnerships from Julie coming next. We're just going to continue on, even though we're passing 3 o'clock.
Cool. Well, Completely Retail Marketplace is a series of commercial property-focused events that take place in the UK and the Nordics. We are looking at a few other territories, but you'll have to keep an eye out for where we pop up next. Just so that you understand the context of what Completely Retail Marketplace is about. It started off as a platform to offer retail and leisure brands a space to meet and network with a diverse range of property agents, landlords, shopping centre owners, investors, franchise operators, and organisations to discuss the market and opportunities for physical space. So it's a really amplified space that we've tried to create for everyone to do business in. It's definitely deals focused and a transactional type of event. What sets us apart, you'll see in the slide that that's on screen at the moment, is that we've done a really stripped back version of a trade show just to optimize the effectiveness. We've done this by ensuring that all the stands are the same size, the same signage and spec, just to offer everyone involved a level playing field. It offers an opportunity to collaborate with other like-minded businesses, to grow your network, to gain brand exposure. We also offer free entry for retailers, which is really great and an opportunity to really try and uplift the sector. And then a complimentary drinks reception, which is always well attended. Our next event, or the first event for the calendar year, is on the 25th of April this year at Old Billingsgate in London. And you can expect over 1,600, 1,700 attendees and over 80 exhibitors. But just aside from doing business and setting up meetings, the show offers also another array of different opportunities. So if we can go to the next slide, please. One of the main highlights that we have is the soapbox. And the soapbox is a platform that, sorry, are we trying to skip ahead a little bit here, a platform for businesses that are up and coming and wanting to really expand their physical presence in the market, to pitch their business to our audience of landlords and professionals and potential investors, and then to network and grow. And this April, we actually have a really exciting opportunity for brands. We've teamed up with Landsec to offer a pop-up space for a month in one of their sought-after retail destinations. But not just that, they've added in a 10-minute takeover of the iconic Piccadilly lights, which is something really incredible, and we're super, super excited to launch. We've actually just launched it today, and I'm not sure if we're able to watch the video or not, Alex.
Not quite, but I think
Okay.
what we should say is anybody listening
Yes,
in
that's
that is
what I was gonna
basically
get
looking
to.
for space to basically get onto your
Please do.
site and apply for the soapbox.
Definitely. So we've actually just launched it this morning, all the comms about Soapbox and about the competition. So if any of you are interested in getting involved, if you're at that stage where you're looking to grow your physical presence and could really do with the opportunity, please do get in touch with us. We also, you can get hold of the events team through our website and follow us on LinkedIn for a little bit more information as well. Aside from the soapbox, if we want to go to the next slide, please. That was it. We're also launching a brand new initiative called the Innovation Studio at this April's event, which is powered by CR News, and it's moderated by quite well-known Lisa Pilkington, who's a BBC radio presenter as well. And ultimately what the Innovation Studio is doing is offering these fireside chats to uncover trends, predict change, and provide intelligence, just to give completely retail marketplace audience a proper understanding of the retail sector, and just also to elevate the event and offer our delegates and attendees the opportunity to share their voice and their thoughts. So yeah, we've, as you can see, it's going to be quite a busy event this year. And at Completely Retail Marketplace, we're always looking for opportunities where we can assist the retail property sector. It's obviously been really great to partner up for the Vacancy Partnership. And we're always looking for ways to partner up and to assist the sector. I think it's going to be quite interesting to see how we can really try and get more involved and see how April's event can try and make a difference.
Well,
so, yeah,
really,
thank you.
Thank you, Gabby. I'm really excited about April, and hopefully some of the people listening in today will get a chance to meet in the old-fashioned way, in three dimensions.
We hope to see you guys there.
Yeah, fantastic. Okay, so just moving swiftly on, Julie, I'm going to hand over to you to take the last session of today, and then I'll do a little bit of just an update about the future to finish things off after you're done. So over to you, Julie.
Yeah, sure. Hi, thanks, Gabby, and thanks, Alex. And for those of you that I haven't yet met, I'm Julie Holden, Community Director for SaveTheHighStreet.org. My role is all about partnerships and projects. We've heard about so many different projects and opportunities in this session. But the key message really from me is that everyone has a part to play. In fact, I think Alex has already mentioned exactly that. Collaboration's not exclusively a high street or town centre thing, but when people who really care come together locally, it can have a really positive impact on a place. This slide here just gives a flavour of the level and the number of and types of stakeholders with a vested interest in successful high streets. And in our experience, the projects that focus on repopulating and regenerating trading space have got the biggest success when everyone pulls together. So on the next slide, please, Ollie, we will sort of look briefly at three key opportunities to accelerate partnerships. We've got the first one around public and private cross-sector partnerships. This is from local authorities, getting to know their local landlords and really understanding their intentions for vacant properties in their towns and high streets, to local place level planning, regeneration and retail reviews, which really get under the demands and the needs of the local population. and through to meanwhile projects and permanent incubator opportunities that John mentioned earlier. I mean, Alex also touched on the mix of what works really shouldn't be underestimated. What we do is we undertake local discovery work, we make connections, and often that's within a set framework of funding guidelines or within existing programs of development and support. Some of the UK Shared Prosperity Fund projects that we're involved in right now have got a whole range of public and private partners and stakeholders. For us, it's about joining the dots and making the connections and helping scope the brief and helping find the suppliers and the solution partners. And that's what the Vacancy Partnership's really all about. We're seeing an increase in opportunities for social enterprise and local makers. They're an audience that is relatively new to our high streets and town centres, but they're adding some real great value. It's also important to mention signposting and opportunities to find common ground and simplify the support and the projects that are on offer across a place. So that's a little bit about that sort of first partnership there. In terms of local champions, we've said before, they come in all shapes and sizes. We generate campaigns and we help to really mobilise the full range of stakeholders that have got a common goal and a shared passion across a place. Again, John mentioned earlier, the competition type approach has been really successful for us, a model that some of our projects have seen some great success with. We do everything we can to reach all corners of a place and to provide information and to encourage the positive sharing of new opportunities. And we'll continue to build and to grow our network of local champions. And then on traders groups, whether they're new or existing, we know that working together can generate additional footfall and increase trade for a place. Whether a proactive and successful business improvement districts already in existence, they make a really valuable contribution, but unfortunately they're not everywhere. And in some cases, high streets specifically have got very special needs. So we've been working across a number of projects to set up traders groups. This slide here just gives a few testimonial statements from some of our previous projects. We're currently working in Barnsley in South Yorkshire. We're working with 3 very different principal towns. Some might call them villages. Each one's got a lot of potential, but they all need different things. But once they're mobilised, they'll be stronger and they'll be much stronger communities to help one another. And in terms of how it works, we start by making the connections. The engagement's so important. It's often not possible for a whole range of reasons, but we encourage the coming together, we help facilitate, we share ideas and best practice, all based on what we know works. So with that in mind, Alex, I'm going to hand back over. I know that you had a few sort of closing things that you wanted to say, so I'll be just happy to hear from people after today about how we can talk about some of these projects.
No, thank you, Julie. And, thanks, Katie, Leo, Paul, and Gabby. And thank you all for joining us today. We've run over, but I hope you felt it was well worth the time, because the future of our high streets and our shopping centres really depends on how we all act now. Everyone's success and failure is connected. And as we've heard today, there are many opportunities to do more and work better together. The Vacancy Partnership exists to make this possible, repopulating and revitalising any type of vacant space anywhere in the UK. If you're a brand looking to launch or expand your bricks and mortar presence, if you're a landlord, agent, developer, or asset manager with vacant space, if you're a place level stakeholder looking to stimulate your local high streets, or if you're a solution provider with something or anything you think can make a positive difference this year, we want to hear from you all. The stakes are high, but there's also a lot to be optimistic about, whatever role you play in this market or wherever you are in the UK. The most important thing we need to do now is embrace change. If we can address the vacancy crisis head on, we can accelerate the transition to a stronger high street economy for everyone. So that's it for today, but it is still the beginning. The Vacancy Partnership is just getting started. And if you want to explore anything we've talked about today, as Julie just said, then please do get in touch. We're here to help, and together we're stronger. Thank you very much.